Hi, Joe Camberato here, CEO and founder of National Business Capital. Thanks for tuning into this video. We're going to talk about short-term business loans versus long-term business loans, when each one of those products makes sense or don't make sense, some things that you should consider and really think about before moving forward with one of these options. National Business Capital has helped fund over $2 billion since I founded the company in 2007. That's $2 billion with a B. We have over 75 lenders on our platform, and we help match you to the right one of those lenders. And we have all of the products available that you would need to grow and scale your business right here in one place. We make it easy, so whether you need a short-term solution or a long-term solution, we're here for you, we can help you. And sometimes you may need a short-term solution today, and you might grow into a longer-term solution, or an opportunity may come up later on where you need a longer-term solution. So we're not just about the first funding, we're also about growing and working with you and being a true financing partner as you grow and scale your business. So there's all different types of lending products out there today and different lenders that offer different products. What's really important to remember too is going to the right lender, and that's where we come in. We match you the right lender. If you apply with the wrong lender, you may be looking for a long-term product, but the reality is they only offer short-term products. So you want to make sure that you're working with the right lender, and that can be really challenging on knowing where to go. We take out all that frustration and time from you having to shop around from lender to lender. You could do it right here in one place. So there is a time and a place for a short-term option versus a long-term option. Sometimes a longer-term business loan product is actually not a good option for you. One, it could be more expensive, but two, and could restrict access to capital. And then sometimes a shorter loan option can really put a lot of strain on your business and not be the best option, but it all depends on what you're using the money for. So as an example, if you're looking to finance equipment in your business, you typically, that's a long-term asset that you want to finance typically, so you would want to use a long-term product. You can use a business loan for that, but there are also equipment lending options that are available. We work with some equipment lenders that will finance that specific piece of equipment. And if you're financing equipment, you can finance it over 2, 3, 4, and 5-year terms with monthly payments and very competitive interest rates. The other great thing is when you use one of those longer term products for a piece of equipment, typically the UCC or lien filing is only usually against that piece of equipment. So there's not a blanket lien on all your other assets, and it doesn't lock up your cash flow, so you can leave it open to get other types of lending products, lines of credit or business term loans. Now, if you were to use a short-term loan to finance a piece of equipment, you could finance it over 5 years. You have a low payment, really great product. You can get that piece of equipment to work. And the money that you're saving in your cash flow, you can use, to, finance, a working capital maybe for the employee that's going to run that piece of equipment, or have some additional money to take on and manage cash flow for the jobs that it's going to do. So if you were to use a short-term product for that, it would really jam up your cash flow. Now, let's just say you're looking to buy inventory and resell it. You don't want to use a long-term product for that. Typically for inventory purchase, depending on when you buy the product and the life cycle of I buy product, I sell it and get paid on it, if that's a 30-day cycle, then you want to use something that's short-term so you can have constant access to capital and also pay the least amount of interest. If you're buying inventory, you can use a 6-month product. You can also use a 12-month product. And some lenders will work in prepayment discounts. So if you buy inventory, sell it, get your money back, you can pay the lender off and execute a prepayment discount and save a lot of money in interest. These are really important things to know. So a lot of times I see people use long-term products to do inventory purchases, and then they're growing and they're able to go and buy more inventory, but they've taken out this long-term product. Their business is growing, so they're reinvesting any profits, so they can't pay it off, quick enough. And what happens is they can't access more capital to buy more inventory. The other thing you might want to consider if you're constantly buying and selling inventory is a line of credit. You also want to look at a line of credit. What's the cost of capital per month versus our term loan product, and what's that cost of capital per month? How many times can you turn your inventory or make those sales in a year? And then really look at which one makes more sense for your business. So there's a lot of different nuances and different situations. And what I would say is, depending on your situation, will really make up that product that may make sense for you. Just give us a call. Speak to one of my business financing advisors on my team. We have a really great group of people. We're just around 100 employees. They know all the different lending products and different lenders and all their guidelines, so they can have a really healthy conversation with you and explain what you'll get approved for and what you will not get approved for, but also explain why. And they also can explain the things that you will need or should do in order to get approved. We'll also help package everything up and manage you getting approved and work with you all the way from application to funding. So thank you for watching this video. I hope you found it helpful. Make sure you put your pen to paper, understand your ROI, understand the life cycle of what you're using capital for. That will really help us have a better conversation and make sure we're matching you to the right product. Keep doing what you're doing and keep growing.